Hello and welcome to another video from Ag360 Grain Marketing. I am your host, Austin Gehring, and with me today I've got Mo Stefan. Today we wanted to give you a monthly update on kind of our thinkings for market IQ, fundamentals, technicals, where the market's going, what we see is happening in the market. But first off, we want to give a disclaimer that past results are not necessarily indicative of future performance, and that there's always risks in futures and option trading. So I want that keep that in mind as we give you our opinions on the market. Now, to start off, let's hit some corn fundamentals with Mo.
Okay, I'll be discussing fundamentals for corn, beans, and wheat. And again, fundamentals are just actions that are being taken right now, and they can support the market to go higher, or they can pressure the market to go lower. So let's start off with Ukraine export sales and shipments. Well, with the war going on there, those have been shut off, and both sales, probably no new sales, and shipments on existing sales have probably been cut off for vessels in the ocean. And also recently they talked about interior shipments of wheat by train, and Russia has destroyed some train bridges. So the idea there that could be supportive to the market is that the business could come to U.S. or other corn export nations. Okay, next, Ukraine corn plantings. Well, they're ready to plant just like we are, and we are doing right now in the U.S. And there's even been some rumors that the farmers are out there in bulletproof vests and wearing helmets, but they are getting some planting accomplished. But it probably by no means will be what they normally do in a year. The other fundamental that's kind of driven the market already, and is today because corn plantings are behind, that the big news was that we're only going to plant about 89.5 million acres this year. And again, that'll depend on the weather and will they get out there and plant it. I mean, there are 3 states I'll mention, Illinois, Iowa, and Minnesota. Their average planted right now is 5%. Last year, it was 57%. So those are just some 3 big corn states that aren't making a lot of progress. Again, if we don't plant the corn acres, you can always plant beans, which again would reduce corn acres more than this 89.5, which is the lowest it's been in a while, and it could increase bean acres. U.S. export sales, they've been poor. U.S. export values have been higher than about every export nation, and it hasn't increased. Sales are just mediocre, to say the least, and they're not increasing, again, due to the high export values from the U.S. to the import nations. Brazil's corn production, they are finally getting maturity on their second corn crop, which is usually a big corn crop for them. And they've had some problems. They had good weather at first when it was maturing, and recently they've had some dry weather and maybe concern about yield and production. Ethanol demand, it's been just stable and strong, to be honest with you, until maybe the last few weeks. It's been just pretty much normal. And that's supported the market going higher. So getting down to carryout, the current carryout is $1,440 billion. And some expect, because ethanol demand might be increased by USDA, and export sales might be increased because they've been good, that we might take that carryout to maybe $1.2 billion. So that could be, again, supportive to the market. And I've got this on all 3 of the fundamentals, but the dollar index is running right now at 103 points. That's the highest it's been for a long time. And then really what that means is when somebody wants to buy our commodities, be it corn or anything else, it takes more of their money to pay for because of the value of our dollar. So that's been kind of a pressure point to the market recently.
And if we look at the technicals, the confidence gauges are showing readings in the green. That means that technically the market is stronger, and Sometimes that adds a little bit of pressure to the market. Fundamentals, the confidence gauge for that takes into account the carryout to use ratio from previous years and whether today's carryout to use ratios compare to some times in the past. In this case, when we had similar scenarios, the price was lower than where we're at now, but there also wasn't a war back then. And looking at the corn indicators, the RSI stopped triggering today as we drop below 65 RSI. That means that the market isn't necessarily oversold at this point, but it's still fairly strong. And technically, we could see a little bit of pressure in the market, but right now we're at 2-week lows. And when you listen to Mo's fundamentals providing support to the market, that may be enough to give another push higher, but we'll have to see what comes next week. Moving back to soybeans, we'll hit the fundamentals for soybeans.
Okay. The first is Ukraine sunflower oil exports and sales. Just like their corn exports and sales, they're cut off. So nothing's going on. No new export sales are being done by the Ukraine because will they be able to ship or not? Again, I didn't mention it in corn, but it's all due to the war that's going on there. And how long will it last? So that's been supportive for the market. And, if the war ended, there's somewhat of a lot of premium put into the markets for wheat, corn, and beans. And those are kind of a price risk premium that could be taken away just as fast as it was put on the market. Okay, Ukraine sunflower plantings, same as corn. They're not out there yet trying to plant sunflowers, but will they? Will they get out there? What conditions will they run into? Again, probably no doubt there won't be as many sunflowers planted in Ukraine as there has been in the past, and they are the number one sunflower oil exporter in the world. U.S. Soybean acres projected at 91. That is the second time in history that bean acres will be higher than corn acres. So that right away was negative to the market and has held it back some. And again, when I said if corn doesn't get planted, beans could get planted, and that could add to that 91 million acres that they're expecting and be kind of not supportive to the market or put pressure on it. U.S. export sales, they've been pretty good. We're running about 91% of the USDA's estimates for the year, and that compares to normal about 88%. So not that far ahead, but they're there and they're staying, right where they should be. South American soybean production, it's been poor from the get-go. Way early on, they had projected 135 million metric ton of soybeans harvested in Brazil, and now could have dropped down to 125. So that's million metric tons, and each million metric ton is about 36 million bushels. So they could have lost 360 million bushels in production for sure. The current carryout, 260 million. That probably won't change much. Export sales haven't increased, and USDA probably won't do any adjustments there. So I don't think there's going to be if you do see it move, it's going to be either side of 260 million in the May 12th report that comes out next week. I do have, again, the dollar index there, and again, it does take more of foreign countries' money, their value of their money to buy our product. So that's been a strain on all three commodities.
And if we flip to the technicals, the soybeans, as it kind of felt with the higher acres, have been a little bit pressured a bit more than the other two grains. These confidence gauges are reading more close to an average 50% reading, where you could go either direction and the technicals aren't necessarily pushing strongly one way or the other. Fundamentally, the gauge is also pegged over 100%, as again, these prices are fairly high, and past scenarios with the carryout to use ratios pointed to a lower price in those years. So the soybean indicators, RSI, and the price change percentage in relation to the insurance price are both not triggering at this point. The RSI at 49 is basically what the gauges are showing, and that there's not a huge push one way or another technically on where the market should be going. And that price change percentage has shown that we have gone higher from the insurance price at points during the year. So not quite as strong for soybeans technically as we saw for corn, and we'll see for wheat as well. So we'll move on back to wheat and discuss some of those fundamentals.
Okay, let's again sound like a broken record again for all three grains, but Ukraine export sales and shipments have pretty much ceased. No new export sales, shipments. They did have, again, sales made and unable to make delivery. And that supports the wheat market because the business could come to the U.S. and there are other export nations. The Ukraine wheat harvest, that's coming on soon. They harvest their wheat about the same time we do ours. And big question, I haven't heard, much about will they be able to get out there and again, no doubt, just on like planting soybeans and corn, the full harvest probably won't happen. Will they get over all their acres? Probably not, with the conditions that they're facing. U.S. winter wheat conditions. This last Monday, USDA said good to excellent was 27% unchanged from a week ago, and that compares to 44% average, and I think conditions last year were 51% good to excellent. So those low good to excellents, you're just pretty much figuring that production is being lost, and we know that by the dry weather that we've gone through in Oklahoma, Texas, and Kansas, just all through the hard red winter belt. U.S. spring wheat plantings, they're getting started, but they had a blizzard up there, and they had rains, and they're getting behind in plantings just like they are on corn and soybeans. And, up in that area in the Dakotas, Minnesota, they could switch from not planting spring wheat and could plant corn and beans. But they probably won't switch acres from corn and beans to spring wheat. But if spring wheat doesn't get planted, and it is running behind already, and due to the weather conditions, that also is very supportive to wheat because we just will lessen the supply in the U.S. and the world. U.S. export sales, poor because, again, of our values. Will USDA make an adjustment in the next May report? That's very possible. And if they do, they'll reduce what their expectations are, and that will increase carryout. European, India, and Argentine wheat crops are in poor conditions. They're suffering. Same situation we have here in the U.S., dry weather, and some heat in some of those areas have really taken their toll on the crops. So again, carryout last month was 678 million. And probably won't change a lot. Again, if they lower our export sales expectations, we could increase that carryout slightly, but no big move is envisioned by anybody at this time. And again, there's the dollar index, and we already talked about that, how their money to buy our product.
All right, and a quick look at the technicals for Kansas City and Chicago wheat. They are all reading in the green, meaning the market's been fairly strong. We're back near highs from last month. RSI isn't quite oversold yet, but the other three indicators are indeed triggering as well. Fundamentally, we're quite a bit higher than we were in past years that are comparable to the carryout to use ratios this year. But again, we didn't see a war in those years. So in some ways, we kind of divert to the fundamentals that Mo mentioned in years like this. But Chicago wheat also showing fairly strong, a slightly less strong RSI, but 3 out of the 4 indicators triggering as well. That's just something to watch out for. And with that, I think that's all the time we have. Just a reminder that there's risks in futures and options trading, and that past results are not necessarily indicative of future performance. We want to thank you for watching, and we hope we give you good information on help with your grain marketing. And with that, we'll see you in the next video.